Well, thanks to everybody for taking the time to join us here on a Tuesday afternoon. My name is Glen Sarvady of 154 Advisors, and I serve on the steering committee for TAG's Fintech Society. Today's conversation, I think we've got a great panel set up to talk about the latest trends and the ever-evolving landscape of fintech regulation. So we'll, I think, have a lively conversation for about an hour. If you take a look to the, hopefully, if you don't have it up on your screen, the chat window is a great way. We'd love for this to be as interactive as possible. So if you have questions along the way, please go ahead and feel free to ask them, and I'll reserve a little bit of time at the end of the hour to do direct Q&A as well. But would love for it to be kind of a give and take along the way. So please consider throwing in your 2 cents. Let me very quickly introduce our panelists going, counterclockwise, I guess. Kim Ford, first off, she's the Washington-based head of government relations for Fiserv, a very prominent name and company here in the Atlanta, Georgia fintech market. Theresa Kanaen, who is a partner at Arnall, Gregory, and is the co-head of their payments practice. And Kell Canty, who is the CEO and co-founder of Legible, which is a startup fintech company in the blockchain tax and accounting space. Thanks to all of you for joining, and we'll just get a quick start right into things from there. When you talk about regulation, I think at least the household name, it seems these days, is the Consumer Financial Protection Bureau, the CFPB. So I'm getting a message that we are only seeing me as opposed to the everybody. Maybe we're just going to be alternating for the photos in the panels as we speak. But the CFPB is kind of the biggest kind of attention getter, and obviously there's changes going on there with the new administration. Kim, you're well positioned on this. Can you say a bit about what you've seen that's either already changed with the Biden administration at the CFPB, and or what you think is going to be changing in the near-term future?
Absolutely, Glenn. And by the way, thanks for having me on here today. So, I think if you remember the situation that we were all in the United States when the CFPB was created, right? It was created in the Dodd-Frank Act, and that was signed in 2010. I think the CFPB officially opened its doors in 2011, and so there was still a lot of angst around perceived abuses of consumers, specifically in the financial services space, right? And so it started out as an agency that was rather aggressive and became, somewhat of a polarizing force, I think, pretty early on, because it became, where generally Democrats liked the aggressive nature of the CFPB, and Republicans felt like there was, too much power in a sense in one director, and that the purview of the CFPB and how many consumer financial products and services that it technically could oversee was again, a really, really broad remit. So it wasn't, I think, much of a surprise, at least to those of us in DC, that when the administration changed from President Obama, obviously a Democrat, to President Trump, obviously a Republican, the leadership that President Trump installed for the previous 4 years was perceived as much more business friendly. So while the CFPB under Mick Mulvaney as acting director, then Kathy Kraninger as full director, said that they did take a number of enforcement actions, it just was not quite an aggressive agency as we saw, when it was first stood up. So now, again, we have a shift to a Democrat again in the White House. And so again, no surprise that we now have, staff and a director who is not yet confirmed, but likely will be in the coming weeks, who plan on returning to that more aggressive stance. And I think it's just helpful for 1 second, when we think about like actions that the CFPB can take, there are a couple of areas that we look at, right? So they can obviously issue regulations that pertain to, again, their scope, which are consumer financial products and services. And when you look at Title 10 in the Dodd-Frank Act, where the CFPB was created, there are a heck of a lot on that list, right? So they can write regulations. They can also obviously go after companies with individual enforcement actions, which could, result in some sort of penalty or a cessation of an activity that company has been undertaking. But they also have the complaint portal, and I think that's really when you look at, I think what scared a lot of folks from the start of the CFPB wasn't necessarily that, that folks thought that they might be on the list for an enforcement action, but that complaint complaint portal makes it really easy for any person who feels like they've been aggrieved in some way to kind of make a stink about, the product or service that you're offering that they don't like. And there are some timelines in that complaint portal that companies have to look at. So when somebody lodges a complaint in the complaint portal, the company is supposed to respond in 15 days, and they're supposed to try to remedy or resolve that issue in 60 days. So that means you generally need some sort of, dedicated staff or at least some way to prioritize if you end up in that complaint portal, not only responding, but figuring out a way to actually resolve some of those complaints. So again, taken together, I think it's good for us all to be very mindful of what the CFPB is looking at. I think we can expect a lot more of an aggressive posture, and I think some of the early things on the list, and then I'll stop talking, will be things like fair lending, overdraft fees. That's something that I do think will be high up on the list. We know that the nominee for director has a fairly strong dislike for student loans, student lending. There's an open proposal for on a regulatory proposal on Section 1033, which is essentially open banking data aggregation. So there are some areas that the CFPB, I think, will be taking a focus or a scrutiny on very early on, as soon as Rohit Chopra is actually confirmed as the director.
Thank you. A couple of kind of follow-ups on that. You mentioned the complaint portal. And one of the reasons, obviously, we're talking about this is the way that fintech regulation, CFPB, and other agencies, administer their duties is obviously going to have significant impacts on whether they're financial institutions, fintech companies, et cetera, and how they have to navigate these waters. Kind of curious, have you seen anything during the Trump administration versus the Biden administration? Do you have any insight? Did the number of those complaints change in any meaningful fashion? And can those complaints be not only against chartered financial institutions, but also fintech companies? What's the kind of the scope of that complaint box?
Yeah, so I would say, what I saw, and I don't have exact data in front of me, but I think what the change from when Richard Cordray was director to then, again, Mulvaney and then Kraninger was, it wasn't that the complaint portal was set on ice. They just didn't seem to be making as much, they weren't issuing press releases on an annual basis about the complaint portal during the Trump years as much as they did under, the Obama years. So I don't know that there was actually necessarily a huge change or drop off, other than folks may just not have known kind of what was in the portal. But the portal is searchable. I find it a little tricky to search, but I mean, it is open to the public. You can search, by all sorts of, either company name or category of search. And I think we did see, because they did just release a report, I believe a couple weeks ago, there did seem to be an uptick in complaints, especially during COVID-19, on, some areas around, I think, credit cards. For instance, I think some mortgage complaints and even some prepaid cards complaints were higher. And again, I think that's representative of the fact that folks were in maybe economic hardship and maybe felt like they should have had more attention paid by their issuer or their mortgage servicer to their financial situation, and maybe they weren't getting the kind of deal or something relief that maybe they expected. So I don't think it was necessarily driven by the fact that practices in the industry were changed. I think it was a reflection of the fact that people's personal situations had changed. So again, I think, as the economy recovers, maybe some of those will naturally, dissipate. But, I do think, Glenn, the change will be, under the newer leadership back at the CFPB now, we will probably see more public announcements about the complaint portal. And so that on its own may just drive folks to go, register their own complaint or review the material in there.
That makes sense. I'm thinking kind of the same way it worked with Obamacare, less advertising on TV,
Yep.
that there was an open enrollment period, so therefore there were less enrollments. Kell, we were talking before we started that, obviously the CFPB is not the only game in town when it comes from a regulatory standpoint. And I know you spend some time, given your role in cryptocurrency and blockchain, et cetera, you're thinking more about, I think you've had more interaction with the OCC, which has been very active in the crypto space, and maybe some of the other agencies. Can you provide a perspective there?
Sure, and the past year or so has been kind of a banner watershed for blockchain and crypto, and a lot of people may not be fully aware of some of the things that have come out of the regulations and the regulatory agencies. So just to kind of lead with some of the big ones that people aren't entirely familiar with at a federal level, the OCC under Brian Brooks, who, by the way, just took position as the CEO of one of the major crypto exchanges in the United States today, Binance.us. But as temporary chief there, some regulatory letters went out that were pretty impressive in scope. One was that crypto organizations could apply and become federally chartered banks. And actually, two of them have already done that. And so we actually have operating right now Anchorage and a couple of others that are full federal banks and being able to take advantage of the banking license. Also, here in Atlanta, one of the world's greatest crypto organizations that we have hosted here, BitPay, has applied for that as well and made that publicly known in terms of being a bank, and that is a huge situation. Other letters that have come out from the OCC making clarifying rulings around crypto for banking institutions. The OCC is the banking regulator, for those that don't know that, is that banks can actually bank stablecoin issuers, which are a particular type of cryptocurrency, and hold funds for them. And then one that was pretty interesting and a little bit far-reaching, I was surprised by it, was that banking institutions at the federal level can actually run blockchain systems and can make payments and do settlements in cryptocurrency. So pretty huge news in terms of the OCC as a banking regulator putting those out. It is a slight question whether the new administration is going to keep that kind of ball rolling. There's been a little bit of concern or some talking about rolling those back. I don't know what that would achieve, but as far as we can tell, that those are moving forward. Also from the IRS, obviously there's a huge impetus there in that recent news has shown that there's about $1 trillion in unpaid taxes. And there's a major effort and a completely new effort called Hidden Treasure that is comprised of both the civil fraud and the criminal prosecution elements of the IRS to go after underreported and non-reported crypto income, of which there's a lot. So the estimates in terms of compliance by taxpayers within the United States and fulfilling the reporting obligation on cryptocurrency gains, it can be as low as say 5 to 10%. And they have moved to the point where they're training every single IRS agent on virtual currency, which is what the IRS calls cryptocurrency. And they're making that a huge effort to move forward. And then separately, there's also some rulings that have come about from FinCEN, particularly around the ability to do KYC and AML on what they call self-hosted wallets, which are just regular crypto wallets, which are on chain. They're already issuing that sort of regulations around general trading exchanges that came about from the FATF rulings from June of the year before last. So a lot of movement in crypto, a lot of things are going on. You've probably seen the news about, BNY, the oldest bank in America, adopting crypto. Things like JP Morgan spinning out a completely separate division for all of their blockchain and crypto activities. PayPal, obviously, Square, Tesla having it as part of their treasury. So that is a huge rise, and the rising tide is brought together, and it kind of does a dance back and forth with these regulations as people see that happening and are more open to it. And quite frankly, I think the regulators and legislators are seeing the naked truth of when China is issuing their own digital currency, and the fact that this is not a US phenomenon, that it is a global phenomenon, that trying to regulate to shut it down as opposed to regulate for the US to be a leader is now the tack that they're fully moving forward with.
Now, that last piece particularly makes sense to me. I want to come back when we go around the table again to some of those points around taxation, because I think in Tesla accepting payment in Bitcoin for their cars, et cetera, I think are really interesting points. Thanks for the scoop on this too. I had not heard that Brian Brooks had signed on. I knew he had left the OCC at the end of the Trump administration. I think you kind of touched on this. At this point, it's kind of watch and wait. I mean, I'm kind of curious to what extent the OCC's most kind of proactive stance on Bitcoin and cryptocurrency had been purely his campaign, and how much we might see it kind of the same way Kim talked about the idea that if you just don't promote something, it just doesn't become as visible.
Well,
I don't know what we can expect to see.
I did want to mention one other thing that I failed to bring in the general overview, just because there's so many agencies that touch upon this. But the Securities and Exchange Commission, the SEC, is a pretty important one as well. And you may have heard that just in the last week, they confirmed the new chairman, which is Gary Gensler.
Mm-hmm.
And people may not be aware, but he is fully versed in blockchain and crypto. In fact, he, as a visiting professor, has taught blockchain and crypto courses at MIT.
Oh,
so he is bringing a ton of industry and other experience, as well as technology and particular blockchain and crypto experience to bear. Now, he is a little bit of a stickler, but he's also open to it. So he obviously wants this to be done in a well-regulated, safe, efficient manner. But to have someone that has actually taught courses on crypto and blockchain, being the head of the SEC, is extremely promising. And I think we're going to have even more movement forward there. We'll have some more guardrails, but we'll have more movement as well. So it's kind of a trade-off, just like everything. But it's really interesting to see that, and glad to have him on board.
Yeah, I was not aware of that, but you're right. That's great to have somebody with that kind of a background in that position. Exactly, when you've got things like the central bank digital currencies, at least in other countries, coming on board. I know we're still a couple of years away here, but clearly there's no reason to think that it's just going to go away. Theresa, I think you can kind of tie these two together pretty well. I know in your space, leading the practice, you work with a lot of payment processors, and the FTC comes into the mix a lot. We talked a bit about some existing court cases that are out there right now that are pretty interesting in that space. And if I'm not mistaken, it's one of the FTC folks from their commission that is actually the candidate to take over the CFPB as well, right?
No, thank you. That's exactly right. Commissioner Chopra, as Kim was saying, is the nominee to take over the CFPB. And of course, all of the commissioners on the five that make up the Federal Trade Commission are outspoken consumer advocates. But I think Commissioner Chopra, perhaps the most of all of them. So it would be very strong leadership going into the CFPB. And as Kim was saying, the CFPB has sort of had its ups and downs in terms of level of activity that corresponded to which party was in the Oval Office. And so with the Biden administration, we expect probably even more activity. We've seen some of that already in March of 2021, just a couple of weeks ago. The CFPB brought the first lawsuit we've seen in the Biden administration against a processor, Brightspeed, and its CEO, saying that Brightspeed had processed remotely created payment orders for a scam that was one of the pop-ups that you see on your computer. This has been infected with a virus, call this number, we'll fix it, when really nothing is wrong. And it's an interesting lawsuit for the CFPB to take, because previously the CFPB's involvement and focus on the payments industry particularly happened when the underlying merchant was providing a financial service of some kind. But now it appears that the CFPB's take is payment processors themselves provide financial services, even if the underlying merchants that they're working with might be tech support or nutraceuticals or any other sort of thing. If that merchant has done something untoward that the CFPB finds deceptive, they may bring suit against the processor if they feel like the processor was insufficiently active in trying to head off the consumer harm. But the FTC, I think, has a much longer track record from the CFPB, because the Federal Trade Commission has existed since the 1930s, whereas, of course, the CFPB is only 10 years old. But the FTC, I think we are looking at some potential changes in how they go about doing what they do. And it all depends on how this case before the United States Supreme Court is decided. It's AMG Capital Management versus the Federal Trade Commission. And the crux of that lawsuit is about one particular provision of the Federal Trade Commission Act. It's a provision that lets the FTC get an injunctive relief. That means a court order saying knock it off against somebody that is doing something unfair or deceptive. Over time, the FTC expanded that to also get money damages. And for the processing industry, that is a huge amount of damage, because what they say is, you ISO or processor you only got so many basis points off this bad merchant when you were processing for them. But we don't care about your profits. What we want is the entire transaction volume in damages. So if you did $80 million in transaction volume for them, that's what we want. Never mind that you only made a few basis points off of that.
And you don't have that money anymore.
And they don't have the money anymore, right? Well, and they never had it really, because you're only making basis points. So it just made litigating against the FTC an extremely daunting, high stakes endeavor every single time because of the scope of damages. Well, the AMG case is saying that section of the FTC Act really can't be used to get money. If you want to get money, FTC, you need to proceed under some other sections of the Act, which say damages are available if the entity, not just processors, but anyone had either violated a prior consent order with the FTC or some kind of clear rule like the telemarketing sales rule. But it's all about notice. Did I have notice that what I was doing was wrong before the FTC says they can collect damages? So we're waiting to see how that will come down. That probably will be decided around June, around the end of the Supreme Court's term. It's been pending, oral argument is over. And the justices were very tough on both sides, so hard to see which way it will break. If it breaks in favor of the FTC, nothing changes. We have the CFPB and the FTC sort of as like twin forces together who can both be very aggressive in the damages that they seek on behalf of consumers. If the decision breaks against the FTC and this program they've built up around the injunctive relief provision turns out to be just injunctive relief and no damages, then we would expect to see a shift in one of two ways. One is that I expect a lot more rulemaking to come out of the FTC, because if they need to make a rule that somebody would violate before damages are available, I'd expect them to make a lot more rules. The other is that we might see them teaming up more with states' attorneys general, because a lot of times states have consumer protection statutes that are a lot broader and more powerful necessarily than maybe the way the Supreme Court might interpret the FTC Act if it comes down against the FTC. So by teaming up together, they can still take very aggressive stances against people that they believe have harmed consumers. So we're waiting to see, but I expect not less enforcement activity from the FTC, but maybe a shift in how they go about it if the Supreme Court does not come down in their favor.
Interesting. And I want to come back to some of those points as well with regard to what you're seeing and what's really keeping folks up at night, both from your standpoint and the processors as well. But Kim, I want to come back to you. This is one of the topics I've been particularly, I thought was really fascinating breaking news just over the course of the last couple of months, and that's the formation of the Payments Leadership Council. And I know you've got kind of a front seat to that process, because it's a new, I don't know what you want to call it. Is it a trade association, an industry group? But it's the four major card networks, Visa, MasterCard, American Express, Discover, and the three big players in the processing space, Fiserv, FIS, and Global Payments, coming together. And I think one of the things that makes it particularly interesting is a former head of the CFPB. Actually, the original deputy director, Raj Date, is your first executive director. So I know it's still early stages, but can you tell us a little bit about the origin story, how that came about and where you see it heading in terms of mission and whatnot?
Yeah, I sure can. And full disclosure, we were not one of the, originators of the idea. We were approached kind of after, it was already being mulled around a bit by, the network. So I can't, take credit for the idea, but, as you said, right. So it's the four global networks, and, FIS, Global, and Fiserv happen to be, global in scope as well. And so that was actually one of the considerations that we had was, as we looked around, and payments have become such a mainstream issue in the regulatory sphere, right? I mean, for a long time, payment processor was not in the lexicon of most, regulators, certainly not members of Congress, certainly not state legislators. And, I think kind of certainly since the Dodd-Frank Act, but I mean, to me, it almost even seemed like once Apple Pay came on board, suddenly people were really interested in payments, and then fintech started being bandied about, right? And so I think what we've seen, in developed areas like the European Union, United Kingdom, the US, the regulators have different reactions. In some cases, I would characterize the EU, for instance, as being almost a little bit ahead of payments sometimes, and then the US tends to be a couple of years behind. And so, I think that the founders, and certainly, the conversations that I've been with the other members of the PLC was, payments is global. There's still a lot of misunderstanding or lack of understanding that regulators have, and it would be helpful to have the CEOs of these massive global companies who are actually talking about some of these issues, instead of keeping the regulatory focus confined to, let's say, the heads of DC offices, right? So, I think certainly with the shift in administration here in the US and not knowing, where that was going to lead, certainly I think when you've seen the competitive pressures, with new entrants, right? And, non-card based types of transactions, which obviously the networks are looking at very closely. I think as you're seeing interest in faster payments around the world, central bank digital currency, right? The list keeps growing. There was a desire to make sure that the CEOs are thinking through a lot of those items, but with more of a global lens. So things like consumer protection generally, financial inclusion generally, data privacy, cybersecurity. Those are the areas that this group is looking at kind of early on. They just had a CEO meeting in early April. It was the first one, the first official one. And as you acknowledged, Raj Date is the executive director. The group met with Treasury Secretary Yellen's number 2, Wally Adeyemo, and had a really productive conversation, kind of talking through the role that these companies of the PLC have had, for instance, in distributing the stimulus money. So I think, where the idea came from was, if you look at all of the different trades in DC in particular, since the Financial Services Forum changed its, membership, and the networks weren't allowed to be in it. If you look at the payments trades, you have obviously bank-focused trade associations like the American Bankers Association and others. You have the merchant-focused ones like National Retail Federation, others, and you do have some robust payments trade associations. ETA obviously comes to mind, TAG and others, but it's not always getting to the CEO level engagement. And so I think the desire was, it's not that any particular trade association was missing the mark, but let's have maybe a smaller group who can look at, again, some things on a global scale at the highest levels of these companies, and then, kind of figure out the policy agenda from there.
That's awesome. I mean, I've learned so much more. You hit on a couple of things that I hadn't even realized before, because until now it's been kind of the press release and a couple of the early stories around the announcement that I was aware of. You point out, and I hadn't, this is me putting my US hat on, I guess, my blinders, or whatever you want to say. It hadn't really occurred to me that all of these organizations are global. Is the focus of the organization, at least at this stage, to focus on US regulation, or is it truly global regulation?
I think, we have to put a crawl before we walk. So right now, naturally, since we're all in, well, the DC office folks are involved. So we are in DC. Obviously, the CEOs are all US based. Raj is US based. So I think the natural focus is to be talking about, things in Washington, DC and the US, but certainly we will start looking at some other areas. And, again, even things like, if you look at this movement in the European Union for, data localization, we've seen that in India, we've seen that, in other places outside of the US, which, when we're looking at payments from a global perspective, and then you have a country that comes along and says, I'm sorry, you have to have all your servers here. You can't shift personal information outside of the bounds of this country. And yet we know that you go online, we have no idea who at any given moment might want to transact on a website from anywhere in the world. So, putting these physical types of boundaries on payments in a globally connected world, where we're trying to focus on frictionless, right, seamless, efficient, secure, that runs counter to what we're all trying to do. So it's also trying to, I think, drive more awareness of those types of initiatives and how it really can have some strong unintended or maybe intended consequences, but make it really hard for us to transact as easily as I think, where a lot of folks want to go.
The other thing you said that struck me was the notion of, you said that, even the regulators don't fully understand the payments business, which I totally agree with. But it also, I was thinking that your scope may even, or your mandate may even be a little bit broader, because I would say that the average consumer doesn't understand the payments business either. So when it comes down to things like who's really paying for, the Durbin Amendment, obviously a big conversation point in terms of limiting debit interchange and whatnot. Is your primary objective to educate in the halls of government, or is it to actually do any outreach to the consumers as well?
I think that remains to be seen, Glenn. It's a great point. I think right now it's more policy focused, but I do think as we uncover these gaps, we're trying to think about how we can bridge some of those with the consumers, and that may be too where it makes sense to pull in other trade associations that have more resources or staff to kind of help think through that. Again, this was not a PLC advances at the expense of an ETA or any other payments trade. It's really, again, kind of driving that CEO level discussion and engagement. But I do want to mention it was interesting because after the PLC announced, then there were some articles about interchange, and we got a little bit, I think, connected to that. And I just want to be clear, we are not touching interchange. That is not something that we're getting involved in. I don't even know from an antitrust perspective that you could even really have even get close to that conversation. And of course, because it's the 4 networks and 3 competing processors, we have attorneys on every call. We have very clear antitrust statements that are read and all of that. So interchange is not on the table, from that perspective. But certainly other types of issues, like I said, around financial inclusion and innovation are.
That's a really good clarification, because frankly, I'd made that same connection. The timing was very similar.
Yeah.
Good. Well, thank you. I appreciate that. Kell, kind of coming back to some of the things you had talked about before. I mean, I think the IRS, obviously, I believe if it's not the first year, it's one of the first years that they've actually had one of the entries on the tax form is, do you own cryptocurrency, or have you sold cryptocurrency? I think you mentioned some unpaid tax bill that's been estimated in terms of trading. And then again, something like, as I understand it, when Elon Musk talks about the fact that you can pay for your Tesla in Bitcoin, if you pay for your Tesla in Bitcoin, you're creating a taxable event in the process. Trading in your commodity, and the tax people consider it trading in gold or any other kind of commodity. And this is obviously what Legible's in business to do. So can you say a bit more about how that's playing out?
Exactly. And the complexity of crypto, because, people think about buying and selling, and that's already a little complicated with all the different cryptos and the exchanges and the rates and things of that nature. You can actually have on-chain wallets and exchange wallets, and there's some complexity there. But also recently, there have been ways to make income in an area of cryptocurrency called Decentralized Finance. And that has grown from, I think, around $1 billion worth of activity and holdings in there about a year or year and a half ago to, I think it's around 70 billion in a year. So
70-fold increase in 1 year.
It's a nice rate, right? Wow. And so that's a great deal of things. So now the IRS has always been a little bit behind the ball in terms of grappling with this technology, because it moves at such speed, and particularly, last year and this year have been difficult due to COVID and related issues with physical mail and all this sort of things, and changing tax law due to the Recovery Acts and the Rescue Acts and things of that nature. But yes, every transaction where you make money in the United States within reason, right, is a taxable event. And so crypto is no different than any other activity in terms of, if you bought an Apple share for $100, you sold an Apple share for $150, then you made $50 in gains. It's either short-term or long-term, depending on that. Now, what's different is the decentralized nature of crypto and all the differing cryptos that come about, and all the complexity and things where you actually have a coin that splits. It's kind of like a dividend and things of that nature. But they've been clear since 2014 that gains and making money or losses on cryptocurrency activity and dealings is taxable, just like anything else. Now, the issue that some people have had, and I still have, is that they're treating it as again an equity and a property and a commodity, in terms of it being a property that you buy and sell, as opposed to, say, buying a foreign currency. Like if you buy French francs because you're visiting over there and then you come back and they've gone up 10 cents per dollar in the exchange rate, then there's a different structure and situation around that, right? And some of the problems that the service has is around how you use crypto can depend, you know, what it is kind of like what you do with it. Because it's a digital asset, you can buy it, hold it, sell it. You can buy it, you can make payments with it. You would never think of buying a car with Apple stock, would you? So to me, it's a little bit of confusion in terms of that crypto can act in the way that you use it, as opposed to being defined by its taxonomy, meaning that, you know, this is exactly what we've defined it to do, and it only does this. Because if you said, well, you know, you're up $100,000 in Apple, and you sold your Apple stock, and then you bought a Tesla with it, everybody'd be like, oh yeah, and you paid, you know, taxes on selling your Apple stock. They go, well, of course, you know, there's a 1099-B that Schwab or Fidelity, wherever I sold it, sends to the, you know, and I include that and I pay it. And then people think, oh wait, but with Bitcoin, you actually send it directly to Tesla. And instead of paying for the $50,000 gain or the $100,000 gain, then the transaction of making a payment instead of the transaction of selling it and then sending the US dollar proceeds to buy a car, you know, kind of collapses and reduces the friction associated with crypto, which is one of the benefits. But people get surprised because they're not used to thinking of making a payment directly in something that can have a capital gain. So it's all those kind of things that kind of trip up people, not to mention the ideas of being able to make income through a variety of factors. Some are, I mean, there's some things out there that are making close to 100% APR in the crypto world, that people are acting, that's why it's going up 70x, right? And it's very complicated and it's impossible to do manually. And with our background in tax accounting and financial reporting, we are bringing that to market to help companies, as well as CPA and accounting firms that have clients that are dealing with crypto, as well as individuals, you know, deal with the complexity of this and be able to, you know, make the required payments. Because again, the IRS and some other agencies are making a hard target of this because they know underreporting is going on. And as you mentioned, this is the first year that on the very front page of the largest, most widely circulated tax document in the world, the IRS 1040 form, that they put that question front and center. I call it question 0, of have you done anything with virtual currency, which their name for cryptocurrency, that would, you know, engender a taxable event. And it's written fairly poorly, the question is. And so if you've made any money passively through any DeFi or actively through trading, then and you don't declare it, they have tools to be able to see that. They have subpoenas that they are issuing to the various cryptocurrency exchanges. And you know, if you had $10, they're probably not going to bother. But if you're hiding, and we're dealing with some clients that have this situation right now, they didn't report in over 7 years and they've made millions of dollars. And the reason that we know is that they've come to us for help because they're in the middle of an audit because they thought the IRS wouldn't be able to help. But the IRS subpoenas the exchanges. They have blockchain analytics software from Chainalysis and others, and they're making this the #1 priority for the service. And anyone who thought, oh, I don't have to pay taxes on my crypto, are going to get an education this year and next. I think you're on mute, Glenn.
Thank you. Sorry about that. That whole anonymity thing kind of falls apart. That original kind of premise that transactions were anonymous. No, not really, depending on the exchanges you used and whatnot.
Well, it's been pseudo-anonymous in that they're, you know, if I send you an ACH transaction and it doesn't have my name on it, it just has my routing number and my bank account number, that's the equivalent. It's just, there was never a name associated with it. But the tools that have been brought about to identify back to the name of the individual or organization owning it have been developed for a couple of years now. And again, it's really a public ledger. You can see all the accounts and all the transactions. All you have to do is tag the account with the name, and you have the most public, transparent ledger ever. I actually spoke in front of the Department of Justice at the Atlanta Federal Reserve, and it was about 200 variety of, you know, Homeland Security investigations, IRS, others. And at this point, with the tools that they have, they love blockchain and Bitcoin. There's a couple of ones that are privacy that are harder to crack, but all these are on the public blockchain and they can trace it. And whenever a criminal is using it and they can see all the transactions to go after them, they like that quite a bit. There are, certain limits, and people go, well, why are people still using it for ransomware? Well, the ransomware lately has been smaller amounts, 10 grand, 20 grand. And the FBI is not going to crank up the helicopters to go after somebody in a foreign country for that kind of amount, right? But they can. They know where it's going to, and they have the analytics around that. So yes, the public ledger of the Bitcoin blockchain is very transparent. And now that they have the tools to add the names to it, people are in for an awakening if they think they've been getting away with that. And that's why we're trying to help them get right.
Fascinating stuff. Thanks. Theresa, kind of following up on what you were talking about before, and just more broadly, that kind of thing I'm sure keeps people awake at night in terms of blockchain and whether your own transactions are identifiable or how you can get at the unpaid tax bills. What are the big kind of other hot topics? I mean, that Supreme Court case you mentioned is fascinating too, but anything else in the processor space or things that are you're following that you see as a particularly great level of concern right now?
Absolutely. Well, one of them really hasn't changed over a number of years. It has continued to sort of be a beneath the radar kind of thing, but it is, I think, one of the issues that our clients in the processing space face the most regularly are the issues of CIDs from the Federal Trade Commission, followed by demands for turnovers of reserve funds.
Can you define CID just for anybody who's not familiar?
Sure. Civil investigative demand, which is basically a subpoena issued from a government body saying, we're looking into something, you must now turn over certain documents. So civil investigative demands are not necessarily indicative of any problem in your business if you receive one, and the government entity that issues it, the DOJ, Office of Investigator General, Federal Trade Commission, CFPB, all of these entities can issue civil investigative demands. And it will say something like, we're looking at merchant X, please give us everything you have about merchant X. And these can be, even when your organization itself is not under scrutiny for your own business practices, these can be incredibly burdensome to respond to, because a lot of times they're not clear about, are we asking for emails, how much e-data is required, is just turning over merchant statements and turning over, say, underwriting files, is this enough? So that's one thing, is how far do you go? And sometimes government regulators, it depends on who's issued it. There's not a one size fits all. Some are much more aggressive in what they want. Some are satisfied with a less elaborate production if that meets the particular goals of their investigation, but it's hard to tell. So sometimes those can be very expensive and time consuming to respond to. Another thing is that it used to be that it was just that the government was investigating. Now we have seen later that the government has cited, the FTC in particular, has cited a processor's receipt of a civil investigative demand alone, just you got one, not anything else, as evidence in the FTC's mind that that processor should have known they were dealing with a bad merchant. And so once you get a CID, it is, in the FTC's view, at least some of the staffers have said, well, that should have been your red flag. You should have known that you should stop doing business with this person or entity, which can be problematic, because a lot of time from a processor's view, the mere fact that you have received a civil investigative demand doesn't necessarily mean there is a clear problem with the merchant that you can see. Maybe there has been some other activity somewhere that isn't visible to you that has caught a government regulator's attention. But then it's the quandary of, let's look back, go through with a fine tooth comb. Do we see anything wrong with this particular account, with this merchant? Sometimes yes, sometimes no, but the prevalence of the government's argument that just getting the CID should have tipped you off has made it really hard for some folks to receive one now, because it's not only the expense of responding to it, but the pain of, even if I can't see anything wrong with this account, do I think it's worth cutting it off just to make sure that I don't end up in the crosshairs of a government investigation in my own right? So those are some of the worries I think that a lot of folks in the processing industry have, is how best to respond to CIDs, realizing that you always want to be compliant. And all of these folks are very concerned with, how do we stay compliant? How do we be sure that all of our practices are not facilitating anybody bad? But then you get the CID and you don't necessarily have an indication in your portfolio that this entity was doing something bad. It's a real quandary.
Yeah, that the proverbial chilling effect comes to mind. I mean, that doesn't make a lot of sense if the whole idea is to explore whether there's a problem, and then that's enough to basically cut somebody off. It's amazing how fast time can go. I want to, again, just make a call out if anybody wants to add a question to the Q&A box. But here's one question that I've got for everybody. It kind of really ties back to our original purpose for the conversation is, we're talking about compliance implicitly in all of this. And, to your point that you just made, Theresa, compliance is expensive. We've got, financial institutions, are built around a shop that, they've been trained over time to deal with compliance. Fintechs, particularly younger fintechs, don't necessarily have that, that muscle memory and that infrastructure in place. Kim, a company like Fiserv, clearly has had experience with clients, but balance of how fintechs need to be dealing with the compliance when they work with financial institutions, the expectations of what do the younger fintechs need to be thinking about as they have to be sorting through these types of issues that may or may not, wind up on their doorstep. I'll leave that to anybody who wants to go out first.
I'll jump in quickly. I mean, I think what's tricky is, we talk as an industry about innovation and wanting to make sure that we are leveraging, all of the amazing things that technology brings us, and you want to give startups a chance, and all of that. And yet, exactly as you say, Glenn, I mean, if you look at if I were trying to start a fintech tomorrow, the idea of just keeping up with the money transmission statutes in the state. I mean, you do a legislative search every session, every single year, and money transmission is one of the most popular forms of bills. It was supposed to be standard, right, when they joined NMLS, and every single state wants to tweak something here and there. It's all, it's really, really tricky, and that's just one area. And so I think that, obviously having the right kind of, counsel, and certainly talking to your peers and organizations like TAG and, some of the other trades out there is huge. But, I think gone are the days where you, as a fintech, could say, I got a bank on one end and a bank on the other. They've got it. My compliance obligation is maybe less so. I think, where the regulators are really, they're asking more pointed questions about, all of the entities in the chain. And I think that we're going to see some more regulatory proposals that will put more obligations directly on fintech instead of just kind of the bank partnership. So, I don't have a silver bullet, but I think it's definitely, I wouldn't count on any type of federal preemption, like a federal money transmission law. We can't even get a federal privacy law passed after, 15 years of Congress trying. So, I think that challenge is going to remain a fairly long-term issue for us in the United States, at least.
I got that word chilling effect coming to my mind again, because again, an organization, a large organization like Fiserv, you can build up that kind of a compliance shop. And maybe, Kell, this is someplace, it's not exactly your order of business, but you're a younger fintech, but I don't know how you deal with compliance. It's, accounting is kind of your bread and butter. So maybe it's kind of baked into your culture, but how do you deal with those types of things? And how does a young, sort of those forgiveness versus permission things almost, you gotta get yourself out on the ledge for a while first and then worry about it when someone finally asks you?
Well, we actually you have to pick and choose. So, we're one of the only organizations in the world that deals with crypto with a SOC audit, which is an AICPA standard there's a couple different types, but in terms of processing quality and things of that nature. So we want to be known as, the top class in the world in terms of doing that. I will say that there are so many standards and so many regulations, particularly in fintech and particularly within cryptocurrency, that a startup could spend all of its money and time complying with regulations, then go out of business and have spent all their money and years of work just to comply. And it's unfortunate. And I think there are some, attempted things to move forward. The CSBS on a state level is proposing a kind of streamlined money transmission thing, but they've tried that before. I was at their hearing in Chicago back in 2014 when they talked about doing it. So, you know, a lot of those things get proposed and some energy, but then don't bear fruition. So I think there's kind of a combination and a mixed bag of doing that. You know, unless you're super well capitalized and have a ton of time, which most young startups don't, you've got to pick the most important ones to fully comply with, and ones that, you know, may or may not, you know, are nice to have or something, or there's a legal position or precedent to maybe not completely spend all of your money and time just getting certified instead of doing business. That's one choice. The ability, particularly in money transmission and KYC AML, of being able to partner with a couple of, there are some organizations where they can outsource that. It's still expensive, but at least it's done, and you can kind of sub-license an MTL and kind of ride on those, and that's an idea as well. And then I probably shouldn't even bring this up, but I will. There are well-known cases of organizations that are now publicly traded companies, wherein they did processing and are some of the most innovative payment processors around, or facilitators of that. That, you know, in a couple of different states like Florida and Illinois, they went ahead and started operating and making money in order to like build up and get the money. And so the rules didn't kick in till later, and they were found to be like, wait a minute, you were supposed to have this, and this 2 years ago. And they said, oh, sorry, we didn't mean to, and then they paid the fine. But in the meantime, they became a $2 billion company. And it's sad that you have to talk about that as a semi-viable way of going forward. But if they'd stopped and tried to jump through all the hoops and do everything that they had to on a state and federal basis, their business may have died. And their business is now, you know, employing thousands of people, publicly traded and everything like that. And at the end of the day, they didn't do any harm. So again, I probably shouldn't even bring it up, but I will mention that that has happened in the past and will probably happen a little bit more in the future. So those are the three kind of areas, is that, you know, choose the most predominant and clear-cut case to doing it forward. It is an expense. It is a time spent, but it is necessary. Second is to partner with a larger organization that can help offlift some of that from your young organization. And the third is, you know, it's a calculated business decision whether you can move on and get enough business and that's worthwhile, and defer the regulations with possibility of, you know, some kind of action in the future. So again, not advocating that, just saying it has happened in the past.
And again, back to that permission forgiveness thing, and it's a logical connection. And while you've got the floor, Kell, question came in: crypto exchanges outside the U.S., do they also validate the customer KYC process, or is there any kind of a different exercise there?
It varies. If they're an exchange that actually has a U.S. Sister exchange or another one, and it can depend on the jurisdiction of the exchange. I mean, so one that's in Europe that's operating under EU directive rules, they will do so. You know, it depends. It's on a case-by-case basis. So, you know, if somebody, and most of them are required, and the U.S. wants them not to take on U.S. customers. So there are U.S. people that use VPNs and other technology to get around and start using offshore exchanges. I will tell you that rises the IRS level of prosecution to criminal. And people who are doing that are conducting things criminally. And they think, oh, I'm just trading and I'm not going to report the tax because this is an exchange in Vietnam that doesn't report to the IRS. I'm being clever. You're not being clever, you're violating the law. And the IRS has shown that they will, particularly through some of the global organizations, probably be getting data from those exchanges as well. So that's just the way it is. And FATF has mandated that all member countries, and these are the top 38 or 40 countries in the world in terms of economy and doing the right things and things of that nature, are required to not only do that, but also be able to KYC and send out that information between exchanges. So there may be some gaps, but they are closing rapidly. And one thing to remember about blockchain and crypto is that it's immutable, meaning that it lasts forever. The records do. So people,
just like the internet.
Right. So people who think they're being clever and getting away with something, there is no statute of limitations on criminal activity and tax evasion. And I wouldn't recommend that. You may find some cases where that's not, the case where you can get by with it and you can get away. But that's not where the whole industry is going, and that's not where you want to be.
Interesting. Theresa, you, if I'm not mistaken, you work with processors of all sizes, and I think some of the same kind of scale question comes into play. It's like, oh my gosh, with some of these regulations we have to worry about, at some point, do they feel overwhelmed? What do you hear from your clients along those lines?
I think probably all the points about it being overwhelming are true and have been very thoroughly covered by Kim and Kell, so I can't really gloss that very much. The different twist that we get is not knowing what the regulations are. And that comes in the unfair and deceptive acts and practices field, where agencies like the CFPB and the FTC bring enforcement actions to stop folks in the processing space from engaging in that sort of stuff. The question is, what triggers it? And so far, the FTC and the CFPB have been extremely reluctant to say what they consider at a rulemaking level unfair and deceptive acts and practices by processors. It's sort of a, you know it when you see it. Mm-hmm. And it started out as we would see maybe like 10 years ago, enforcement actions when somebody hit 30% chargebacks. Not surprising. That means there are a lot of transactions getting reversed. Over time, we've seen that drop to actions where a processor was alleged to have engaged in unfair and deceptive acts and practices because they kept processing for a merchant with 1.1% chargebacks. Huge shift. And so it's very hard, I think, for some of our clients who are so focused on compliance to just know where the goalposts are. Mm-hmm. And so it's a little bit different than being overwhelmed. It's just being in a quandary of where exactly is the next laser focus going to hit. Let's be sure we have our ducks in a row. Just show me where the row is so I can put my ducks there.
We got one last question. I want to be respectful of everybody's time because I know we're coming up on the hour, but Kim, Theresa, I'm not sure who's the best position to answer from outside the US. Anybody wants to navigate the European market was the question, but anything outside the US. I mean, we really focused on US regulation. Kell, you got into the consortium view that, some countries cooperating. Yeah, does the strategy differ if you look outside the US in terms of how you might want to approach the approach to regulation and the various constraints? I'm not sure who's got
I would just say maybe, Theresa, feel free to chime in. I would just say, I think what we've seen that's different, for instance, about European regulator actions, and I'm thinking like back starting with the PS, the Payment Services Directive 1, which is now Payment Services Directive 2, even when you look at, the GDPR, the General Data Protection Regulation on privacy, it feels like the European regulators really strive to take regulatory actions that promote competition, not just innovation, but actual competition. And I think our regulators in the US, while they were certainly seeing a much greater focus, I think now with the current DOJ and, when the FTC board gets filled and all that, I think there will be a lot more talk about competition and antitrust activities. I do think that in Europe, that is top of mind for a lot of regulators is, making sure it's not just an incumbent party, right? But that there are reduced barriers to access. With that said, there's still a lot of regulation you have to worry about, right? And I think what's even trickier sometimes about the EU is that, you have the European Council, the European Commission, and the European Parliament, all that, can weigh in and change, regulations and proposals. Then you have directives versus one company, one country or member state regulation, and how those are, then spread across the EU can be really tricky. So that is another market that I think, there's not a silver bullet answer, but, making sure that you have partners in country or experts, certainly not just in navigating, let's say, Parliament, but the Commission and the Council, I think you would be well served. That would be money well spent.
Makes sense. And version 2.0 for the PLC once they get the US.
Right. Yeah.
Anything to add on that one? I know we are at the top of the hour. I want to be respectful of time. Again, great conversation. This is exactly the kind of thing I was hoping for. I hope everybody out there found it valuable. It looks like based on some of the questions and the fact that we kept a good solid audience all the way through, I think it went quite well. Kim Ford from Fiserv, Theresa Kanaen from Arnall, Golden, Gregory, Kell Canty from Legible. Thanks so much for taking the time, and thanks to everybody for joining us. Thank Rebecca Marcuson at TAG. Thanks for helping us put this together.
Thank you, Glenn.
Thank you. Great to be here.
Bye-bye.